sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. Today's video is going to be a monumental, very special video. I have some crazy, almost mind-melting updates to go over for Bitcoin in terms of my macro, big picture structure for Bitcoin when it comes to, you know, progressing towards the end of this decade. And technically, I mean, I can carry it out, and I've carried it out in past content. I mean, the farthest I've carried out my ideas is to when the final when the final Bitcoin is estimated to be mined at around 2140. I've taken it all the way out to then, which I'll probably do that in the coming days. I'll probably have that in some video just as a fun, I guess, art project, I'll say. But after I touch on Bitcoin, I'm just going to again go over the New York Stock Exchange, XYO, Phantom, JASMY, and then I'm going to be touching on QUANT and CASPAR in this video. But to go ahead and get it started here, for the first thing that I want to touch on for Bitcoin is basically just the phase structure in terms of the harmonics within the price movement, every single bear phase or bear market. So basically, as it's pretty simply outlined right here on this chart that you currently see, we have our origin drop. This is just trying to portray our first drop towards the downside. Then we go into the second portion of this, which we'll see right here is our double M's. We see our 4 peaks of these two M's. We have these 3 downsides right here as well. Then we're led into the 9th pivot point overall of this bearish impulse, I'll say, to the downside, but rather than our typical 5-wave impulse that we see, Bitcoin characteristically shows a 9-wave impulse towards the downside for its bear markets. So again, this is, you can't apply it to the any previous bear market before right here, so 2014 to 2015 bear bottom, because none of them were, and Bitcoin just in general wasn't for long enough in its maturity, its logarithmic progression, and time to really start to print bear phases like this in terms of this length. But let's go to the previous bear market. We see from end of 2017 high all the way down to 2018, beginning of 2019. Again, we'll see our origin drop right here. We see 2 M's right here, again 4 peaks, and then we get our final drop down to the 9th and last final pivot point of this. Again, let's go ahead and point out we see our pi cycle high right here, pi cycle low as well. Let's go to our current bear market. Again, we'll see a pi cycle high and a pi cycle low printed at our current low after our FTX crash. Again, we'll see the same thing here. We have our origin drop leading into the first of the 4 peaks for these double M's right here. Again, with our black trend line that we've seen each time. We are quite literally, we've just slightly broken out of this trend line right here with the current candle. There's still 3 days left on this weekly chart. As you can see, again, each time that we've broken out above this trend line, going back to each of these bear markets, each time represented the beginning of the bull run. As I mentioned in my previous video, we could possibly see the potential of a massive bear trap, which is what's going to correlate to this area right here. So this 4th peak right here, part of the double M's, we get a fake out, just a bull trap, or my bad, a bear trap towards the downside. Again, as I mentioned, it should not, if it even happens, which I personally am not leaning to that being the most likely scenario. If we do see that drop again, we'll just get a return back to the range of our lowest lows right now, which is around pretty much 19,000 all the way down to this chart specifically. Let's see, it has the bottom printed at 15.4 thousand. Let's see if I go to, actually I don't want to go that yet because that's the most important thing I'm going to go in this video, but anyways, around 14, and not my bad, 15.5, 15.7 is the lowest lows we've set currently. Again, we have our 9th pivot point that we hit right here after the FTX crash. And then I put together this nice little fractal pattern collage right here, which just kind of just points out the idea which I think what I think is going to happen in the upcoming bull run. I don't personally believe that what we'll see is a relief rally. So by that I mean I don't think we're going to see something similar to what happened after January 2019 into a relief rally, and then we're basically going to head into a March crash type scenario. If you're familiar with my content, you would know that we are currently within what is commonly known as the super cycle. According to the way that I look at it, it is renamed as a super phase because it is just a phase within a whole cycle of Bitcoin, which again, I'll be touching on that more explicitly at some point in this video. But basically, I believe we'll get a breakout here. We're going to see just some steady move up here just within. So basically, once we break 25,000, I believe the next range that we'll head into and sit in will be around, again, like I said, 25,000 to around 32,000 for the next milestone, which lines up with, if I take all these drawings off right here, pretty much lines up with, so we have our 200 EMA right here, the white one. We have also one of the pi cycle indicator bands, one of the moving averages, which is this purple one right here. Basically, what I'm trying to say is the bands on multiple of these indicators that I'm using, moving averages, are all converging right here at around 25,000. So once we solidify breaking above that, finding support, I think we'll then, and again, like I said, we could see some wicks up to like 28,000, I believe. Like I said, since I'm not, these fractal patterns are weird sometimes. Like as I went over on this chart the other day, this one on this daily chart has it going up more towards like 36,000, which again on this chart lines up with more roughly around 30 to around like 26,000. So in general, 25 to 35,000 once we break 25,000. So let's just say around 28 to 35,000 is the next range I believe we'll be heading into roughly. Once we sit there for a little bit, find support, and continue to move towards the upside, continuing to confirm the bullish sentiment we've been seeing within the last few weeks, I believe we will then go up towards as high as 35,000 to around 42, 43,000. Again, sit there a little bit, see some retracement, and then eventually we'll begin this major parabolic leap to approximately 250,000, give or take 30,000 in general, 200 to 300,000. Last 2 months of this year, likely bleeding into around January, February of 2024. Again, it's just going to be similar to what happened after the March crash to 64,000. Which then this brings me to, let's see, actually it is this chart. So this is the, if you saw what I posted on my community tab last night, this is the mind-blowing, mind-melting, monumental pretty much idea that came to me last night. I have, about 3 years ago, I was just staring at Bitcoin's overall all-time price chart, and I just started seeing fractal patterns basically in it. And what I mean by that is I went over this in a previous video. Again, if you're not following my Twitter, this is it right here. It's just @Ayanus, which is my YouTube channel name, but on Twitter I have 2 S's because the other name was taken, obviously. But just to briefly go over this, this is an all-time Bitcoin chart, which you can find if you just look up all-time Bitcoin chart. But thankfully, recently, and I noticed this when I was putting this chart together, TradingView on this index chart, and I have to assume probably on the BLX chart as well, they added a price data all the way back to basically Bitcoin's inception back in October. Well, I guess all the way back to September of 2009, which I was very happy to see that. But to go back to this chart, again, as you're looking at this, just follow these colored lines. It's basically connecting again. So from back here, where my cursor currently is, up to this high right here, this is the first cycle for Bitcoin. From where my cursor currently is to this point right here, this was the second cycle. And then from where my cursor is out to our current point in time, this is the third cycle, which we are about just roughly halfway into. Again, you'll see how these dark blue points are connected from right here up to the consolidation of the previous super phase, or commonly known as the super cycle. And then that leads us to the bottom we have recently set, which again just likens the fact that what I was saying was earlier on this chart, we are seeing the super cycle. You can see how it's basically, as I've gone over plenty of times in the past, which it's this chart right here. It's just a massive ABCD pattern, looks like a lightning bolt essentially. And again, that's what you'll see right here on this chart. You can see if we go back to right here, if you just look in this general area, you see this A, B, C, D for the super cycle. Then we go right here, A, B, C, D. You can even see how similar these first two cycles actually look, because they were more, it was just, obviously this is the second style. Bitcoin's going to be less mature. It's going to have less decay factored into it. So these two are going to look most similar. And this is basically, so this is the third cycle. As I said, this is the first cycle that really, I would say, looks drastically different. But even if you look back here at this point, you can see this W, sideways consolidation for a little bit into the lightning bolt. So, I mean, that's essentially just what we got right here leading into 2018, 2019 bear market, the March crash. You see this W, move up a little bit, sideways consolidation. We have our A to B, and then now we've seen B to C, and then we should be seeing our C to D recently, which again is what lines up with right here on this chart, heading towards, again, in general, 200 to 300,000, as I've already mentioned. But the update on this chart is, which I've already been going over this 72 bars idea here, which this is a very strong, this in general, the crux of this analysis, this chart that you're looking at right here, is the Bitcoin halvening, which is inherently a part of the technology itself, and in other words, a part of the mathematics which structures the foundation of Bitcoin. So I believe this is honestly, as I said in my community post, I'm not claiming that this is it. I'm not claiming that I am right. I'm not claiming that I know for a fact that this is going to happen, but I personally believe with a high certainty of degree in my confidence that this is as close to it that you can get. I believe this is the most reasonable, the most logical, the best way you could look at Bitcoin, because it factors in, again, going all the way back to its inception, obvious logarithmic progression in terms of decay over time, the lengthening of the cycles across time, the phases as well, the diminishment of the bear and bull markets, meaning that the bull markets are percentage-wise diminishing, bear markets percentage-wise are diminishing, and they are also taking longer to follow through. But once more, so each of these ranges, you can see these vertical dotted lines paired with these time measurement tools of 72 bars. So the second, disregarding this first pair over here, obviously it goes farther back than the price data goes, but starting right here in 2012, the second dotted line for each of these ranges is where the actual halving occurred. And I just put these here as just a nice range, because I generally just like to show things in ranges, because I feel like it's just a healthier way to look at things and then look at something as like precisely exact. Because if you have a range, I feel like you're more open to, you know, seeing something, you know, kind of fall out of line with what you're thinking. But anyways, we can see right here, starting from this one right here, going out 72 bars, we see our bottom range encompassed within this. The bull market began literally pretty much right after this. We see the same thing right here in 2019, and I believe we are currently seeing the beginning of, and the same thing right here in our at the current end of this bear market, I'll go ahead and say. So again, going up to this one, I just did the same amount of time that's in between each of these halving ranges right here, went out back, did the same thing right here. Obviously, like I said, back before Bitcoin didn't even exist back here, so like probably like 2000, early 2009 or so. And again, we see the same thing. It predicted this bear market bottom as well, leading into the bull market. So I mean, like I said, I think this is as foolproof as you're going to get. I believe this will actually work for the rest of the time Bitcoin is here, and for the rest of the time the world is here, assuming we don't blow the world up soon with nuclear war and all the craziness that's been going on recently. But outside of that, so as I've been mentioning recently, again, if you're familiar with my content, I wasn't sure if we were going to see a double top similar to how we did back here. So I'll go ahead and put a bubble over it. So similar to how we saw right here for the double top that we set back in the previous ending of the bull market. Wasn't sure if we're going to see that. What I find interesting about this is if you actually go back here and you look at this area right here back at the 2013 high, there's actually a double top right here. It's just really small, which is, again, factors into why this, again, we see a double top, same phase, this time third cycle instead of the second cycle, but yet it lasted longer in time, which again factors into the logarithmic temporal decay that Bitcoin and its logarithmic progression over time as will continue to see, just due to the inherent way of the mathematics and just chart formation in general. But outside of that, I believe that think that we will see a double top here, because that is also essentially, I mean, even the bear market of the next phase we're heading into, which again is going to be a repeat of pretty much November of 2013 to December of 2018. Again, it's what is encompassed right here. So with this double top, we could likely push around $300,000 around 6 to 8 months into 2024. Again, lining up with that double top. We will then enter the second phase of our current third cycle, which will, again, like I said, be a repeat of this previous valley bull market basically back here, which I believe will take us up to, I was previously saying as high as 1.6 million. I redid the Fibonacci retracement. It's actually more likely around 1.37 trillion, which I find ironic, because if you're not aware of it, within physics, the fine structure constant of the universe, which was discovered 1916, physicists have been puzzled over it for decades upon decades. I mean, pretty much a century at this point. 137, you can find it in stars. It's basically just what structures the fabric of the universe, mathematically speaking, from a scientific point of view. But I've touched on that in the past as well. Again, if you're new to my content, I am a polymath. I'm mostly I'm self-educated, by the way, in physics, psychology, philosophy. I mean, I know a good bit about history as well, because I want to know the history of the things I've had to teach myself over the last years. But outside of that, again, pointing out this trend line range right here, so these yellow dashed lines, you can see this pivotal trend line right here, pretty much beginning with the high of 2013. We bounced on it 2019, 2018, the March crash bounced on it, and we didn't directly bounce on it for our current bottom, but we just approximately just above it, barely bounced just a little bit above it. Again, you can still see how this range, and I could add another line as well, just slightly above it right here, and we would touch it. So in general, this trend line range, again, these yellow dashed lines are very strong trend line, and is what lines up with basically seeing the support, the final support for this bear market bottom right here, and around halfway into 2020, not halfway, like 4 to 6 months into 2027, which I believe will encompass the bottom range for the next phase of our current cycle 3, which will bottom out, if I had to guess, just at lowest around 50 to 50,000, which is just roughly in alignment with the previous double top that we set. And then I believe once we start to see this slow move up like a valley, as I mentioned back here, we'll just see a longer version of 2013, December of 2013 to December of 2017. We'll continue just to kind of stagger above this yellow trend line range as well. And then again, bringing up this pink range that I have right here, which factors in the top of 2011, the sideways minor bear market of the previous, or the previous cycle's super phase, and encompass the bottom range of our phase 2 of the previous cycle, the valley-esque formation, as I tend to call it. And then we didn't touch it in our current cycle of our current phase 1 for either of these 3 bottoms right here. But again, I think it's what is going to, as it did back here for the previous phase 2 of the cycle system, I believe we will bottom out again within the same range of our current phase, or our current cycle 3, again seeing phase 2 bottom out right here from around beginning of 2026. Will be led into that, I believe, end of 2025, and then like I said, the bear market will kind of literally just go sideways until about like February, March, April, May, June or so of 2027. Then we'll finally start to see that upheaval there along with that. If we take a look here again at this RSI, the stock RSI and the MACD, again we have these bear market flips right here for I guess technically the bull market flips on this MACD, which I've been pointing out and stressing heavily recently. Each of these bubbles you'll see right here, so going back here to 2019, 2015, and then back here all the way to 2012, we see pretty much just a single main downside to the bottom, ending the bull market, leading into the bear market, and then we see just one major flip at our lows, which again is indicated by each of these bubbles, which goes back to each of these bottoms on the actual price up here. We've seen that flip right here, so again, strengthening that as well. We're seeing the stock RSI begin to have lift off and head towards the mid-range right here, so again, extra strength there. If we take a look at the RSI, you'll see we broke out of this bullish divergence range we've been setting on this 2-week chart for about 7-8 months at this point. Broken out of this under the water range, basically the best buy point, which again I have these color coordinated with like red and blue shift because, you know, if you're not familiar with it within just physics and just science in general, when you're red shifting you're losing energy, when you're blue shifting you're gaining energy. But once we finally get this RSI to move above this yellow line at 57.91 and confirm movement above it, similar to how we did back here for the previous bull market, that right there will just again act as extra confirmation for the bull market to start ensuing, which again, I mean, for all intents and purposes, I personally believe it is. Again, this channel is not meant for advice. I make these videos because I find this stuff heavily enjoyable and it helps me pass my time. And along those lines, if anything, this is just another source of information which you guys should be factoring into your own personal financial investment decisions. But outside of that, that was really all that I wanted to touch on for this chart. Again, this was what I put it on my was talking about on my community tab. I think this right here is very pivotal. Geez, sometimes I can't speak. I'm sure a lot of you have picked up on that at this point. But anyways, like I said, I think the next 8 years or so, 7 years, pretty much the end of this decade, is going to be very interesting if we continue to follow through like this. I mean, obviously, it's going to act as confirmation as what I've been saying for quite some time. I didn't mention it, but the top of 1.37 million roughly, I believe in general will happen sometime. Specifically, I have it on here lined up with about the end of 2031, but 2030 to 2032 is what I'm looking at for the upcoming, basically the ending of our current cycle 3, which is specifically phase 2, as I mentioned. But here to go in this daily chart, so we're again focusing on this turquoise, this light blue, neon blue fractal pattern. So if we take all this off, you can see how we've gotten these bumps upwards. We've broken above our 200 EMA, which is great to see. We don't want to see price start to go back below it if with strength and volume support. If we do see that, I would likely begin to believe we're going to see that bear trap that I mentioned and return back to our previous lows. Let's see, down here within this general range right here. But so far, so what I want to point out is you can see on this blue, again, this blue fractal pattern, you can see we have our initial upside, which just lines up with, so this area right here. Oh man, what happened right there? So these two, why is it, oh, it's because I have my magnet on. That messes me up so many times. But these two areas right here, basically, I'm correlating, and then we see our second high range set right here, which is correlating right here. So we could likely see this downside right here, which again is going to line up with, likely, if I bring it more kind of in tune with each other, we'll come down and test this 200 EMA at around pretty much 21,000 approximately, maybe seeing some wicks down to like 20.8 thousand, 20.5 thousand at the lowest, I'd have to guess. But I would believe probably no lower than that. Outside of that, again, we need to continue to see movement up towards 26,000. On this daily chart, it's important to break above, as we've already broken above the 200 EMA, we need to break above this 800 EMA right here, and then continue price movement above as well. Again, by around March, maybe about like a week into halfway into March, we will likely be within that $30,000 to $35,000 range for Bitcoin, assuming we don't get that bear trap or everything I've just been going on for the last however long, 23 minutes or so of this video is just going to be wrong for whatever reason. Obviously, no one knows what they're talking about, and only time will confirm anybody's ideas. But here for the lower time frame for Bitcoin, last night when we got this pretty sizable drop right here into, we saw some pink vector candles. Again, that's what printed back here when we got this drop. I was not indicating, but projecting if we continue to go down with this pink pattern right here and these two pink lines, these two price targets of 21.4 to 21.6 thousand, if we continue to go lower, basically invalidating these two pink vector candles right here, basically ensuing this M pattern, this yellow M pattern that I have right here. We could have dropped down to as low as these two ranges right here, again with kind of a nice comfort zone within this general descending range we've seen right here. But fortunately, we did get a nice move today. Actually went and set some new local highs. We are currently getting on the RSI right here, stock RSI right here, a hidden bullish divergence. We can see on the stock RSI that it's very minor. This is a very minor hidden bullish divergence that we're getting, but the slope right here for this RSI is negative, as you can see, and then the slope for price right here, as you can obviously tell, is positive. So right there we're getting a divergence, again hidden bullish divergence. Again, you'll see right here stock RSI, same thing as well, more drastic than the RSI. Not seeing it on the MACD, but right now we could continue to trade sideways just in general within this range we've been setting right here, which is around 22.3 thousand to 23.3 thousand. So pretty much this $1,000 range that we've been going sideways in since about January 20th of 2023. Right now we could be likely making some sort of nice triangle consolidation. It's not really too much here because you can't really draw any trend line right here for the most part, but could likely maybe be seeing something along those lines. Maybe we'll see some short sideways consolidation with where we are currently, and then we'll continue to move upwards from here. But right now the key for this lower time frame is to not see price heavily was strength and volume support go below this 800 EMA, which is now currently sitting at 22.1 thousand. If we do happen to go down here and test it, that could be a likely scenario to test it, find support, and continue to move towards the upside. But if we continue to go down, then we eventually break through this trend line, this turquoise one right here, which is more so at around about 22,000 on the dot, just about, which is just what is encompassed the previous sideways action that we saw back here when after we got the first major pump within this year. So we don't want to see price go back into this. I mean, well, if we do see price go back into this range, I don't think it's a terrible thing. But I do think if we do see this, then it's just going to more so start to confirm that bear trap that I've been mentioning over the last 2 days. So that was all for Bitcoin. Again, here for an update on the New York Stock Exchange. Obviously, if you've been in the space for a while, the decoupling is just the idea of Bitcoin, or just in general cryptocurrency, finally having a divergent path from the stock market. For the most part, the stock market and the Bitcoin crypto market in general, but mainly talking about Bitcoin, have been correlated, meaning if the stock market's going up, Bitcoin's most likely going up, and vice versa. As I've been mentioning from past many days, we're getting, you can see with this trend line range right here, again turquoise, upwards positive slope right here, even a smaller one from this point to this point, again still an upwards positive slope. The MACD is showing the opposite right here, so we're basically seeing a double bearish divergence, negative slope on RSI, positive slope on price. Again, like I said, we could continue to go up from here. I do personally believe that it will just continue to go down. I do think that the decoupling is starting to ensue, and that's not just because of what I see in the charts, but mainly because of where the world is sitting right now, how much catastrophe has happened within the last 3 to 4 years, and just I'm a very intuitive person. I can kind of just sense things behind the veil in an intuitive way. I mean, ever since the pandemic began, I literally felt like I got thrusted into a twilight zone. Like, the world has not felt the same ever since then. Things are quite literally different, and I say that in all honesty. Things are just not the same as they used to be. But again, if we continue to move up from here and we do push into this red zone, either we will get rejected from there or we will not. If we push into this red zone, which is around 16.5 thousand to 17,000, and continue to go higher, then the decoupling will likely not be beginning as early as I have been talking about. But again, I think we'll get rejected from here down to, or general range of around 12.4 thousand to as low as around 11.4 thousand. Again, I'm mentioning there's some irony here too, because if you actually I mean, even the MACD down here is printing a bearish divergence. The stock RSI is printing a bearish divergence as well, essentially. But I find it ironic. If we see the stock market get rejected, it's basically going to head to the range that Bitcoin would head to if it were to continue going lower, which is basically 12 to 10,000 at bare minimum. And again, I mean, I think the stock market could definitely, I mean, it could completely break through this fan range that I have right here to 10,000 and even lower. As I've mentioned, we are heading into, and it's been in the news, not with just my information I point out, that we are heading into another 2008 market crash, which is very likely going to be worse because of the decoupling and the fact that the society is definitely moving towards blockchain solutions, which is going to restructure the fabric of literally everything in terms of social cohesion, peer-to-peer interaction, etc. I mean, I think that it could go as low as to like, if I remember correctly, I think I said like $6,000 to $7,000 or something like that. And it'll likely happen. The stock market will likely bottom out around when Bitcoin is topping out again, because I think we'll still see correlation between the stock market and Bitcoin, but it's going to be inverse to what it has been over the last 14 years or so. But here for XYO, again, update on this symmetrical triangle pattern. Ever since we got this nice increase in price recently, ever since we've broken out of it, we've literally just been going sideways, which, I mean, it could be a bad thing. Obviously you don't always want to go sideways for too long, because it kind of starts to look like it's going to break towards the downside. But really, as I'm sure a lot of you are well aware of, as long as Bitcoin continues to break up from here, altcoins will as well. And I do continue to believe at some point Bitcoin will continue to go higher instead of seeing a bear trap or even the bear market continuing lower than it has so far. Again, the price target range for this pattern that I'm pointing out is, in general, lining up with this 800 EMA as well, breaking above it around 1.5 penny to 2.5 penny, which again lines up with, we go all the way back to the range that we set for Bitcoin. I'll just go and go back to it. The range that we set for Bitcoin right here from around January of 2022 to April 2022, from around basically when we got rejected from 48,000, that is what lines up with this area right here for XYO. So I believe like pretty much what Bitcoin is going to do, we're going to see XYO move up to this range. It also lines up with this ascending trendline range that I have right here. It looks kind of funky on this chart because I have this drawn in a lower time frame chart, but this is, I don't know, I might have it down here low enough to see it, but it essentially lines up with right here. You can see how we were trading, and I was going over it when we were seeing it, but we were pretty much trading in a nice, I'll just take a highlighter over it, but in this nice symmetrical almost right here until we obviously got a breakdown towards the downside. But that's basically, that ascending trend line is what lines up with basically the support for this triangle we were forming right here, and basically the resistance of this upwards buildup right here as well. But let's go ahead and go back to, so again, this blue pattern right here is what I was entertaining with Bitcoin with this pink pattern. Obviously we got an increase with today's price action. Right now we need to see it confirm support along. All these moving averages right here are converging just about as well, which hopefully is going to end up being a good thing, and we won't continue to go lower. Hopefully we'll continue to see things go up. I mean, it's not a bad thing if we go lower, if Bitcoin goes lower, as long as it doesn't mean that we're going to go lower than the bear market bottom we've already set, which it's not a bad thing. It's going to present great buying opportunities if it does, but it will invalidate literally everything that I've been saying, which, you know, personally, as these are my ideas, I don't want to see that. But right now we need to see price prosper above around 0.0065 approximately, towards the upside even more, which again is just going to line up with breaking above this 800 EMA and not getting suppressed by it anymore. And to go back to, I believe, depending upon how much more longer we go sideways, we could likely see this 1.5 penny to 2.5 penny get hit towards the end of this month, or about maybe the first week, maybe even 2 weeks in the next month, so February 2023. If we go here to the Bitcoin, XYO to Bitcoin chart again on this 4-hour chart, which is what we're looking around, right? Well, this is the 12-hour chart, but this is XYO to USD This is XYO to Bitcoin. Obviously, the XYO to USD is printing more of a symmetrical triangle. The XYO to Bitcoin is printing this falling triangle. And we got a breakout of it recently. We came down and retested it, and now we're starting to see movement towards the upside. So again, hopefully with Bitcoin, the market in general will continue to move up, and this is going to act as a nice breakout retest of the resistance to find support, and we will continue to go higher from here towards the 1.5 penny to 2.5 penny range that I'm speaking about. And as I've been going over, if we do see that, that will take the XYO to Bitcoin up to pretty much around this general area right here, so encompassing just about this area right here for the XYO to Bitcoin, which again, as I've mentioned in my previous videos, because we'll see XYO to Bitcoin already touching its previous all-time highs, and the XYO to USD chart will only be right here within this yellow box and not as close to the highs as the Bitcoin chart. That's basically going to act as a premature indicator that the XYO USD chart is actually about to continue higher past its previous highs of around 8 cents or so. Again, my price targets for XYO are in general $2 to $3, $2.30 to $2.50, with a specific range of $2.36 to $2.42. Again, you can see similarities here with Bitcoin, $2 to $3 for XYO, Bitcoin 200,000 to 300,000. Like I've said in my videos, nature, the universe is it's interesting, and it's a very cool thing. It's just self-similarity, fractal patterns, like I've mentioned about many times in my previous videos. There's intricate patterns behind everything in this universe that we live in. But I think this is going to happen, the top range that I just mentioned, around 6, 7, 8 months into this year. So June, July, August or so of this year, which, as I've already mentioned many times, is going to be topping out before most of the market tops out, which will pose a great opportunity to get in this coin early on, get out of it, and then get into other coins that will continue to go higher. For example, things like Phantom and all the other coins that I've gone over on my chart. Or not my chart, on my channel in my past videos. But here for the update on Phantom, here on this daily chart, again, we'll see our fractal pattern. Again, likening back to the same idea of what I've been going over for Bitcoin. This is what we saw behavior in terms of Phantom after the last bull market of the current phase that we're in. So after the March crash, so far we're following it very nicely as well. Again, I'm going to draw correlation points here with a highlighter. So right here and right here lines up with right here on this fractal pattern. So we could see, again, minor retracement, like I said, also lining up with the 200 EMA. This is literally exactly what I just got done going over with Bitcoin not too long ago. And we'll continue to see this to stagger up, again, similar to what Bitcoin will be doing, until we eventually start to converge towards the 800 estimating moving average right here. Again, very important moving average on all time frames. This is a part of the trader's reality indicator if any of y'all are interested. And I also recommend the RSI bars indicator as well. But we'll see movement up towards this 800 EMA, and we might likely get a sizable retracement here because of that milestone, and then we'll see some crazy parabolic jump above that 800 EMA. We'll then head into this fan-like range right here, which is correlated to the double top we set in the previous bull market. We'll see our major consolidation there, and then we will continue to move into the rest of the bull market for Phantom, which first milestone in terms of the high, all-time high, and pretty much the double top that I was speaking about for Bitcoin and that we saw for the last bull market as well. First high range will be around 50 to around we'll say 70 to $100 or so, and then after we get our retracement there, we'll head to around 400 to around $420. Again, this first high range is going to fall more towards the end of this year, November, December or so, and then the second high range is going to fall more towards, for Phantom, this is lining up around June or so of next year, which again, as I mentioned, if I go back here to Bitcoin on this jaw-dropping chart that I was talking about earlier, this 300, pushing 300,000 approximately lines up with June, July, August of 2024, which again is what I just got done going over with Phantom. And again, is going to bring me to another point, which I believe further confirms and strengthens my thesis here for Bitcoin and the entire cryptocurrency market is that we're literally finding confluence on every single one of these coins that I'm going over. And that is a major, if not really the only confirmation that we need to see, is the fact that we're seeing this amount of confluence between just about everything in and of itself should be convincing you of what I am going over. But if we take a look here for JASMY as an update, this is on the 12-hour chart. Again, I'll go ahead and zoom out here just to go over it if anybody is watching my content for the first time. But I think it could push as high as around $44, around the 1.382 with respect to the entire basically bear market we've set, which will be around a 2,000,000% move. Yeah, that might sound crazy. Maybe you're thinking, wow, this guy's stupid. Why would he even say something like that? But if it does this and it tops out pretty much around the exact same time Bitcoin does, Bitcoin's going to be worth like 4.5 to around $5 trillion. If it goes to 300,000, it could be worth like, I think like, well, let's say 4.7 to $5.7 trillion. JASMY has the market supply, or circulating supply currently, it's like 46 point something billion. I rounded it up to 47 billion to do this analysis. So it could technically go a little bit higher than this. But in general, this is, I believe, so if we push this high, then the market value will be approximately $2.3 trillion, which is only going to be approximately half that of what Bitcoin is. I've come to the conclusion through my market research that it is not crazy to say any coin can go an astronomical percentage towards the upside as long as it is not surpassing the market value of Bitcoin when it does so. The only coin that I make exception for that is Ethereum, just because of it's basically like Ethereum, Cardano, and Bitcoin are like, obviously it's like the three top dogs of the cryptocurrency market. I don't make that exception for Cardano, and I personally don't believe that Ethereum will ever actually surpass the market value of Bitcoin, because Bitcoin is designed to be the fundamental store of value for the entire cryptocurrency market, and eventually, along with the integration of blockchain solutions, the decoupling, etc., so on, is meant to be the fundamental store of monetary value for an entire society, an entire global society, which again is touching on the World Economic Forum, the Great Reset, Klaus Schwab, Davos Group, Bilderberg Group, etc., so on. If you're not informed on the things that I just mentioned, I highly recommend you get informed on it, because they are trying to do some not so good things in society right now, and it's basically everybody's a global, I mean, it's everybody's main obligation right now is to be informing yourself on what is going on in the world right now with our higher echelon elites. And you know, as we the citizens, we are the people who genuinely, we have all the power according to the ideals of America. They're not perfect, but America is definitely, in all honesty, the best country to be in today's modern society. It's gotten very bad, not very bad, but it's been going downhill for years at this point. But it's still, I mean, in terms of freedoms that citizens have, etc., I mean, it's pretty much the best place to be. But to go back to the 12-hour chart for JASMY, right now we are seeing, I got our pullback along that I mentioned with XYO and Bitcoin yesterday. We start to see JASMY move up a little bit. If JASMY continues to go lower and everything else doesn't for some reason, because JASMY is a wild card at this point, I do believe there's not much price data on it, and it has been going, it's been very dumpy. So I mean, that might just be something to make you feel a little bit risky, unsafe, whatever. But if we start to lose, again, 200 EMA confluence, again, idea that I'm pointing on all these charts, which is around 0.0048, so around half a penny. If we start to lose that again with strength, volume confirmation, which is lines up with this trend line right here, that won't be good, especially if we continue to lose this band, which right now sits at lowest 0.0043, at highest 0.0047. Then I don't think that'll be good. I personally don't believe this coin's going to continue to go lower. As I mentioned, they recently, with the World Economic Forum meeting, all the people over there, like BlackRock's behind this, again, World Economic Forum, and other groups as well. This has to do with IoT technology. People that used to work with Sony are behind this project. It has to do with democratization of your data. So for example, like when you get asked for cookies, or like TikTok having access to basically all the data on your phone, just when anything's basically asking you for your data, this would allow you, assuming you're using an IoT device, to profit from allowing your data to be shared to whoever wants to see it. You'll earn JASMY token for your data. So you'll give some, in exchange for giving somebody access to your data, you'll be paid in JASMY token. That is the basic idea. Okay, here for Quant. This is an interoperability project. So basically, as I've touched on in the past, trying to tie literally every single blockchain that there is into one cohesive, basically like master blockchain where they can all intercommunicate with each other, similar to how our universe is with our it's not, we don't live in an infinite universe, we live in a finite universe, but it pushes so close to infinity that our brains, the human mind, will never actually figure it out, because I mean, we have limits to our knowledge, obviously, and I think that is definitely one of them. I don't think we're meant to know the literal, actual, finite vastness of the universe. But basically what I'm getting at there is that the universe is basically a massive intergalactic network with black holes at the center of each galaxy, basically communicating with each other through spooky action at a distance, quantum entanglement, if you're familiar with what I'm talking about. Which was recently proven. People won a Nobel Prize for it in physics. But that's how the universe communicates with itself, and make sure that our universe isn't, just in a snap of a finger disappearing, or everything cascading like dominoes into chaos. But that's basically what interoperability projects are trying to do. They're trying to connect literally every blockchain into one massive unit where they all communicate with each other cohesively, scalable. It's decentralized, it's secure, it's fast, etc. And I believe Bitcoin, so Bitcoin has, obviously it's layer one of just in general Bitcoin. Then layer two is the Lightning Network, which assesses like scalability problems. So things like speed and things along that line. But I believe there will be a layer three added to Bitcoin at some point. I have an idea on what mathematics could be used to do it, because I think it's going to be a heavy task. But I think it would make the most sense for Bitcoin to actually be the interoperability layer 3 that we use, because as I said, it's the fundamental store of value. It would basically be in this network that I'm talking about, again, going back to the universal network of intergalactic connections and things like that. Bitcoin would be this very center of this blockchain network, which as the fundamental store of value is giving everything else its value, basically. I mean, if Bitcoin crashed to zero, I don't think that would, because I don't think Bitcoin is going to crash to zero. And I think if it did crash to zero, everything else would die out, because if Bitcoin, the thing that started all this, dies, then who else, why are you going to find value in anything else outside of that? If the thing that started this whole movement dies, why would you want to trust anything else? But basically here for Quant, we can see our point of control with our VPR right here, our fixed volume profile range with respect to this entire price data. Right here we are in a point of control pivot point. Basically a decision is going to be made here. Again, I personally believe we'll continue to go the upside, but again, we could dump for whatever reason, bear trap, or maybe the bull market's not going to begin like I've been saying. But right now, seeing Quant break into the range of like 170 to 190, and they continue to push above that to 200 and higher, will be confirmation, I believe, further confirmation in terms of price support, etc., that this bull market will continue to go out and reach higher highs. If we actually, it's not on here, but if you go to CoinMarketCap, the all-time more data for this coin is on CoinMarketCap. And again, March crashed to the 64,000 top for Bitcoin. That's what we'll see happen here for Quant, which takes Quant to around $10,000. Specifically, what I have on here is $10,257, just approximately $10,000, which is in total, that is a 26,000% move, which is a 2.6 thousand X your investment from the bottom. Obviously, from right now where we currently are, that's only going to be 7,000%. So that's a 700x your investment, which is obviously still fantastic to see. This lines up with the 2.272 to the 2.382 range, which again, if you're not already familiar with it, when it comes to the Fibonacci mathematics and things like that, 382 and 618 are basically two sides of the same coin. Obviously 0.618, 0.382 equal 1. If you flip the Fibonacci retracement, you'll come to see that the 1.618 and 1.382 lie at the same place when you flip them and reverse them. If we see quant start to break below around $125, again, we'll likely see that bear trap, or again, maybe the bear market has some more downside to see. Here for CASPAR, CSPR, I don't know much about this project. Someone has recently, within the last, like, I don't know, month or so, asked me to look at this. Someone again also asked me to look at it, but there's not much price data on here, nothing on CoinMarketCap to help me. I just have this general, basically this very long-term falling wedge or triangle or whatever with these various price targets down here. If we continue to go lower, so around 0.013, so around $0.015, down to a penny at lowest 0.0076, so just shy of a penny. I don't think we'll continue to do that, although if we get rejected right here similar, we could see price go down as low maybe 50% more, which would take us down to around 0.019, so around approximately 2 pennies, which will then again entangle us with this, basically this return to basis throughout this entire downtrend right here. I think that'll only happen if we see that bear trap, or if we see the bull market not begin and bear market continue to the downside. Although right now you can see we are getting a candle on this 4-day chart, small body, massive wicks to the upside and the downside. I'm using the Heikin-Ashi candles. There's a rule with Heikin-Ashi candles that when you start to see the bodies of candles thin out and the wicks go crazy, reversal is soon on its way. You can see a similar occurrence right here. You can see these bodies are small, the candles are pretty big. Again, we'll see the same thing right here. We got this massive relief towards the upside. You can see right here, we saw 1, 2, 3, 4 as we trickled off to the downside right here. Small bodies, rather big wicks to the upside downside. We get this relief towards the upside as well. So again, I personally believe we'll probably more likely continue towards the upside here, assuming we see Bitcoin do the same as well. But we do continue to break up towards here around a general range around 0.042 to 0.051. We hit that, might see some consolidation for a little bit, but we need to see price break above that with strength, volume support, etc., into this range right here, which is in general 0.06, so 6 cents, all the way up to pretty much 17 cents. If I had to believe, we'll likely sit in this range for quite a period of time, which is what is going to find what this is what finds confluence with Bitcoin in terms of this area right here. So this kind of upwards consolidation look at right here before this parabolic move toward the upside. Take a look at the indicators. We're not seeing any major bearish divergences or anything. We've been seeing this MACD consolidate and intertwine with this 0 point, which is the convergent point for this MACD that I use with Bollinger Bands. You can see basically we've been getting a bullish divergence this entire time. Bear market, or the price has been going down, but this MACD has been pretty much going sideways, building up this pressure that a MACD should be in terms of momentum until it finally busts towards the upside. We basically did get a bullish divergence right here as well in the stock RSI and the RSI as well. Say it's more of an exaggerated borderline bullish divergence. As you can see, there is a rather positive slope when it comes to looking at the way price traded right here, but it did go more so sideways than the RSI and the stock RSI went, which is why I'm referring to it as an exaggerated borderline bullish divergence, which again, I mean, that's what we've been seeing on Bitcoin for the last 7 months, a clear bullish divergence towards the upside. But that was all that I wanted to go over in this video. Again, hopefully we'll continue to see this idea that I went over in this video for this chart. Hopefully we'll continue to see it play out. Obviously, I would like that for all the people that watch my content. You know, I mean, this is definitely going to help a lot of people out if I happen to be right. Again, like I said, I think this is definitely the most logical way, most reasonable way to look at Bitcoin. It's basically, like I said earlier, the crux of this analysis is the halvening itself, which is basically, on the flip side, the mathematics of Bitcoin, which, I mean, it can't get any more sturdier than that. But there's one final thing that I want to point out, which I mentioned in my previous video. Again, I just want all you to know to not get too entrenched with this world and with money, as I've mentioned, and I'm pretty sure a lot of you already believe. There really doesn't seem to be much time left in this life that we live. If you've noticed, my channel has a lot of Christian imagery. Obviously, I'm not forcing anything on anybody, but like, at the end of the day, this is my channel, and I urge you all to, get into the Bible if you're willing to. Hopefully you don't get angry with what I'm saying right now and choose to stop watching my content again. I am just basically speaking my love towards all of you guys. I thank you for watching my videos and whatnot. But I do think, if you're familiar with the Bible already and you're familiar with Revelation and the Antichrist, the opening of the 7 seals, the trumpets, the bowls of wrath, etc., so on, what that book talks about, that blockchain will end up being used for the mark of the beast in order to buy and sell in this world in the coming decade, or even decades if we have that much longer left. Like I said, I only believe we have about 50 years at most left, and I think things could quite literally end in the next 5 minutes or even tomorrow, because the Bible speaks about imminency with the rapture and things like that. But that was just my final note that I wanted to go on in this video. Hopefully you guys enjoyed. Hopefully you are able to take away and learn something from my content and my words, and I hope all of you have a blessed day. Alright, I forgot to add something in when I was going over this analysis right here in the video. What I wanted to do was, so as I've been mentioning in the video I just watched and in my past content, I haven't been sure whether or not we'll get that double top that I was talking about in this video. I believe we will, and I believe what confirms that is, so if we actually connect, so back here, if we go to basically, so the end of the first cycle, beginning of phase 1 of the second cycle, all the way to the end of the second cycle right here. Oh wait, no, am I stupid? Wait, what did I do? I already forgot. Oh wait, no, never mind. I am stupid. Okay, so we can see right here with this trend line, you see from, again, connecting beginning of the cycle, end of the cycle, which is cycle 2, we see our ABCD pattern right here, or our lightning bolt, which is the super phase. This is a part of phase 1 of the cycle system that I use. We can see that the second top went out of the trend line. And so if we do the same thing right here, again, connecting in the beginning of our current cycle of phase 1, and what we're going to do is connect it all the way to what I believe will genuinely end up being the at least approximate high range of the end of the current cycle 3 that we're on, of phase 2. You will see here that it nicely acts as resistance for the double top that we got. We have the, basically, so once we end our ABCD pattern from March crash, 64,000, 15.5 thousand up to this double top right here, we'll see, which is what correlates with, I'll draw a circle over it. These two areas, we'll already have one right here, but so back here and back here we see the break above this trend line. And you also, again, you'll see how we had this consolidation point right here. We went below it, came up, got rejected, and then continued into the bear market. We'll see the same thing happen right here. We go below it, go back up, hit it, get rejected, into the bear market. We'll continue to go all the way back up to this trend line right here. But yeah, that was all that I wanted to add in here at the end of this video.
Ooh, I'm regretting now.